Hey, welcome to episode 2 of Joe Knows Paradise. I'm Joe Fagundes. We're so excited you're back with us. Got a great show today. We're excited about talking about some of the market trends that are going on in our area. And I've got a special guest that's coming in to talk about what we all dread talking about, and that's lending. Thanks for being here, and please enjoy the show. All right, so I'm really kind of excited about today. We've got a great guest coming in here in a little bit. He just does a super job for a lot of the transactions that I'm working on and working with, and he does a great, and as far as client service goes, he does just a super job. So we're going to have Brian Parker from Prime Lending on a little bit later, and he's going to really share some good information about what's going on in the lending market in our particular area. I'm talking about markets. I kind of want to talk about what's going on. A lot of updates you'll see. Oh, here's the last 30 days. Here's what we've done for the year. Well, I kind of shorten it and spread it out a little bit all at the same time. I like looking at 60 days because typically a home is not going to close. We get a lot of 30 days and if it's a cash deal, sometimes we'll get them closed in 15 days. But, title work's got to be done. You've got lenders, you've got all this stuff going on. So I like to look at 60-day windows. And so in our market, and I'm gonna take a look at Niceville, and I'm gonna break Niceville apart to Niceville and Blue Water. I'm gonna look at Santa Rosa Beach, and we're gonna look at Destin. And it's all gonna be single family homes. We're not gonna talk about condos, except in Destin, because I think that number is gonna really make people go, wow, what are we doing here? So in Niceville alone, in 2024, in the last 60 days, 88 homes have sold. This same time frame last year in 2023, 126 homes had sold. That's a 31% decrease. Blue Water, and that's Niceville proper now. That doesn't include Blue Water. In Blue Water, in 24, 52 homes have sold. In 23, 63 homes sold in the same time frame, and that's February 1st through April 30th. We're down 18% just in Blue Water. Santa Rosa Beach, and I'm taking all of Santa Rosa Beach. We're taking 30A, we're taking North Santa Rosa Beach, all the way to Point Washington. This includes Watercolor, some of the larger communities down there. This year, 316 homes sold. Last year, 361 homes sold, down 14% over the same 60 days. Destin, they actually have they're detached, single family homes, 71 this year, 88 last year. They're only down 20%. But here's the kicker. Destin obviously has a larger condo inventory than anywhere else that we've discussed here by far. This year alone, over the last 60 days, 88 condos have sold. Last year, 140. The market in condos in Destin is down 38% year over the last 60 days. Why is that significant? Why are all these numbers significant? Because they're all double-digit decreases. With inventory sitting longer and being up, you're starting to see prices improve a little. You've got places and pockets, and we talked about this in the first show, that we're such a pocketed market, because Niceville can be doing really good and Miramar Beach may not be. And, Santa Rosa Beach obviously down on 30A is kicking, and North Santa Rosa Beach lots are selling for $120,000. So you've got pockets everywhere. But if you take an overall look at it, we're down about 18% year over year and over the 60-day period in total transactions closed. Now, we all talk about how much inventory we've got. We talk about how many pendings, but closed transactions are what matter. And that's all that people are really interested in to determine how a market's doing, because, there are people that make offers that never get to close and they don't count. It just doesn't happen. So, we are seeing longer term holds, days on market, as we call it. We're seeing that, expand and continue to grow. I think we're up to around 67 days on average, with it extending even further. So that's kind of the market snapshot of what we've got going on right now. And again, I want to remind everybody, those numbers that I gave are for single family homes, with exception of Destin, where I gave both single family and condos. we're obviously a week and a half ago, we saw a big rate increase. We got bad inflation news. Rates jumped almost 3/4 of a point. Um, you know, I just want to tell people, you marry the house, you date the rate. There's never a bad time to buy a house, because if rates go down, you can always you can always refinance when they do. Um, but if they go up, it saved you and maybe put you into a house that you can better afford uh, to go with as other people see their rates go. Adjustable rates are a little bit scary right now. People that bought them and used them 4 years ago, their rates are doubling. They're hitting that 5-year mark, and all of a sudden their monthly payment is going to double. So, marry the house, date the rate, is what I would tell you. So, talking about the decreases that we've seen, and particularly in the condo market, and I kind of want to approach that because, obviously there's a lot of folks that live here locally that are somewhere else and own condos in Destin, Miramar Beach. Obviously there's a few down Santa Rosa Beach. But those are in Fort Walton. Those are our main markets as far as condos go. And I think what's driving some of this is, people bought them during COVID. Some people stretched to buy them. But the other part of this are the milestone reports that are coming up, which is it's going to have a major impact on a lot of folks, especially in condominium buildings that were built in the early 80s. Anything that has been built after the collapse of the building down in Miami, the milestone report came up. So all the condominiums associations and condo towers are having to do preliminary inspections, and then they're having to file and do a final milestone. Well, all of that involves fixing concrete, fixing walkways, structural type stuff. And if it wasn't done correctly a long time ago, or the salt water's gotten to it and it's aged, it has created a massive amount of assessments for them to bring the buildings back up to the code that they need to be at, which, quite frankly, started in 2001, but has continued to be massaged and improved. And, if you build a house to code now, you've got a really good house, or a really good building, or a really good condo tower. But those that were built back a long time ago didn't have maybe all the engineering that we currently do. So those assessments that are being passed to the individual owners are becoming, can be really, really expensive. So we're starting to see some pressure. We're starting to see a lot of people that can't afford, because the rates have gone up. They had an adjustable. They're seeing their monthly payment double. So, the income that they were getting off of it is getting eaten up. And so does it become worth keeping as something you only use 2 weeks out of the year, and then the rest of the time you're trying to rent it out? Well, inventory's up. Prices are starting to feel the pressure. Look, if you're putting your toes in the sand out your back door, you're not going to feel that kind of pressure. Townhomes, those types of things. But if you're in a condo tower, you're certainly going to feel those. And I would tell you that if you're on the fence, sooner is better than later as far as selling goes. I wouldn't tell anybody not to, if you hold it forever, that's great. Just know you're going to get assessed. But if you're thinking and you're close to your breaking point, now's as good a time as any to put it on the market while you're still getting the income before the fall season comes. The one thing I want sellers to take from today's episode is you got to have a good lender, and you got to have somebody that has the tied relationship with you and with everybody that's in the process of working for you. Because honestly, we all work for the buyer, or we all work for the seller. And so, that is the one thing I would tell you. The lender makes a difference in getting through that whole process. So it's really important to buyers so that expectations are kept and maintained. As far as sellers go, sellers, there's never a bad time. If you have to sell, you got to sell. But I will tell you that the time of year that you put it on matters. We are into season now. This is naturally the time of year that, between our military folks that are PCSing out, our military folks that are PCSing in, the end of the school year. If you're thinking of if you're thinking of selling or you're having to relocate, you need to have your house on the market sooner than later. So really appreciate y'all tuning in today. Let's get on with a great conversation we have with Brian Parker with Prime Lending. We got Brian Parker here today with Prime Lending, and Brian, I kind of just want to step into it, get you to start talking about a lot of different things. But let's start with about you. Kind of give us your background, how long you've been doing this, all that kind of stuff.
25 years this year, actually. Wow. Started off in banking at Bank of America in Pensacola, and went into lending and mortgage lending about a year and a half later.
Oh wow!
So, yeah,
been doing it a while. A few loans under your belt.
I don't know how to do anything else at this point.
I hear you. Well, obviously, I use you. You do a great job. We always seem to get them done somehow or another. And so tell us kind of what's going on in the market. Tell us about, everybody wants to know about rates, and everybody's got their predictions. Tell me what yours are.
If I could tell you what if I was right about the prediction, I wouldn't be doing this. I mean, a lot of those bean counters that are significantly smarter than I am still can't get it right. But I think most are projecting that we're going to be kind of in this range. For instance, VA today, you can get at 6.5%. Conventional 7.25%. We're probably going to sit there until the beginning of next year, where I think most economists are projecting this to be 5.5%, 5.75%. A lot of it's inflationary in nature. It seems like every time we get a breath and rates dip down a little bit, there's a new report that comes out that shows that inflation's kind of still there, and the Fed's doing everything it can to combat it without completely killing the economy. We're just going to need a little bit more tailwind before we get there, I think.
I hear you. So, our market, Niceville is, and our whole market in general, a lot of VA lenders here, or a lot of VA borrowers. There's a lot of VA lenders too, but you're one of the predominant ones. Tell us a little bit about VA, some of the challenges these folks are having, and then we're going to kind of get into some different aspects of what's available out there that's going on.
I'll be honest with you, Joe. There's the VA. A VA loan is a lot easier to process and underwrite than a conventional loan. Notwithstanding, the rates are significantly lower, obviously, than a conventional loan. There was the old thought process years ago that with a VA loan, it was always down to the appraiser. Is the appraiser going to nitpick the house? Is he going to flag up a fogged window or chipped paint, that kind of thing? A lot of that's kind of gone away. Chip paint, anything safe, sound, and sanitary is still an issue. But VA appraisers, the appraisals, they come in quicker than a conventional and FHA appraisal. Again, the rates are lower. They're easier to process. They're the highest performing loan product in existence because VA veterans are, I don't want to say they're more responsible necessarily, but they're more disciplined, would probably be the better way to say it, with their finances, it would seem, than conventional homeowners.
Wow. So in the market today, Niceville, for instance, we'll just take Niceville proper, as they call it. It's down 31% over the last 60 days versus last year in sold homes. You still have VA buyer demand. The guys are still PCSing in and out. But we're probably starting to see some questions about assumables.
Yeah.
Talk to us a little bit about that.
Yeah, that's been the kind of the trend, as you might say, over the last probably 6 months. Mainly because you've got a veteran. If the biggest hurdle right now is rates, right? You have people not wanting to jump off the fence because of the rate increase. But if I have a home that I bought 3 years ago at 2.5%, my home's a lot more marketable than somebody else's home that they don't have on a VA loan per se. So Joe could assume my mortgage, my VA loan, and keep that 2.5% rate as long as you credit qualify under the terms that I credit qualify for. The biggest drawback, though, that a lot of folks don't realize, and a lot of veterans, quite frankly, don't realize, is if a non-veteran assumes that mortgage, your entitlement as the veteran is encumbered until that mortgage is paid off or refinanced. Worst case scenario, if the person assuming your mortgage defaults on that mortgage, your entitlement is encumbered until it's paid off, even though you didn't reside in the home. That doesn't necessarily happen if it's a veteran taking over. If the veteran taking over another veteran's home, you have a transfer of entitlement, then the current veteran is free and clear.
Typically, how long does that transfer of entitlement take from VA qualified to VA qualified?
It's about the same time frame. It's the same time frame as whether it's a conventional coming into assume. Which is the other piece of this. Assumables take a good bit of time. You're not looking at a 30-day close. You're looking at probably 60, 90 to maybe even 120 days. And it's going to be done through the existing homeowner's bank. So you have to go through their process. There's a couple, some small fees, some hurdles. Obviously, you got to jump through to get there. Hoops you got to jump through to get it, but it's all done through them. Now, the other piece of this too is where I may have a home, it's financed and secured at 2.5%. Let's say my balance is $300,000, but it's now worth $450,000, and you want to come assume my mortgage. You can assume my mortgage, but you still have to come up with the difference to pay me, because the VA nor the bank are going to let you finance that purchase price. It's under the existing loan terms. That's another big hurdle. A lot of veterans don't have $150,000 just sticking around in cash that they can just drop on a house.
Right. So they have to cover the appreciation that's happened over the last 3 years. Yes. And you look at some markets, and that
might be more.
It's 75. It could be as much as 75% of the purchase price, depending on where it is.
Right. It's a great program, but people just need to be aware when they go into it. Have the correct expectations set. Know what the hurdles are going to be. You can get around them, but just go into it. Not just the buyer, but the sellers. We've had a couple of situations where you have veterans that are under contract for an assumable sale, but they were never told that their entitlement's encumbered, and now they're contractually obligated to sell.
And so therefore they can't go to their next PCS location, and they don't have the same buying power that they had.
Now, a lot of times they'll have bonus entitlement, but you're right, they won't have the same amount. So it's going to limit how much house they can build or buy, and they're also still at risk of losing that entitlement should something ever happen to the person buying their current home.
Let me ask you this. We've got a couple of new neighborhoods. Freeport Market's got it, but we also have a couple here in Niceville. What about VA pre-construction, that type of stuff? Is there anything like that out there for our VA buyers?
So yes, there is. So VA does not necessarily have a VA construction loan. It's essentially, for a lack of a better way of saying it, it's a conventional construction loan that modifies or converts to VA at the end. It's going to be your typical new construction or construction perm type loan. If you have a builder finance subdivision where the builder say, listen, you can be done, we'll have the house done in 6 months, we can go ahead and have the veteran qualified, and we can look at long-term locks, so they don't have to worry about modifying it. They don't have to worry about carrying the interest cost during construction. That's really the easiest way if the builder has the finances to carry that cost of construction. But yeah, there are construction loans in and of themselves aren't VA products, but they modify to a VA product at the end.
Typical turnaround on let's move away from VA. Let's just say your loan, if you got 30 loans going in a single month, give us your typical turnaround.
First, I would love to have 30 loans going on a typical month right now. Turnaround time, it is product specific. VA, it's quicker. It really hinges on the appraisal and how quickly we get documentation in from the borrower. VA tends to be quicker. They've got 5 to 7 days to get us the appraisal back. Conventional, it could be 10 to 15 days, but I would say on average, you're looking at about 28 to 29 days. We can do them. If we have rush deals because of, a lender failed to do what they were supposed to do for the borrower, we've closed them as little as 8 days.
Okay.
That was as recently as 2 months ago.
So go back in your 25 years and give me the craziest something a buyer did that really choked down the ability to get their loan done.
Bought a truck the day before closing.
Just buying a vehicle.
Yeah, bought a truck.
Which you hear about all the time.
Yeah, bought a Ford. It was right when the Raptors came out, and went and spent 60, 70 grand. And the day before closing, it showed what we call a UDM report. We get an alert from the underwriter that he has a new debt, and had to sit down with him and his wife. And the look on his wife's face when I explained to him that he had to try to return the truck, which is not likely going to happen, it was I want to say sad but funny at the same time. He may not be alive right now. I don't know.
So that is something we talk about all the time.
Right.
Once we get somebody under contract as a real estate agent, we put them with a lender. It's like, don't do anything crazy.
Right.
Don't let something happen that's going to throw this thing off the tracks, so that we're able to move things along. Because getting it to close is what everybody's goal is, mainly the buyers and also the sellers. But we're all trying to make sure that whether it's inspections or lending or whatever, we're not doing anything that is going to jeopardize the ability to do that.
Yeah. And not only that, don't move large sums of money around. If you've got 3 or 4 different accounts and we only need 2 accounts to qualify you, don't move money from one account into these other accounts. I know that you may have the bank statements, but we're trying to keep everything as streamlined and as quick for you. So we're trying to limit how much documentation you have to supply. And you kind of get into that back and forth, and borrowers sometimes just get exasperated saying, why do I have to give you more statements? Well, because you moved $5,000 from one account to the other. We have to source where it's from. That's another piece of this. It's not only don't let anybody pull your credit, just be, I guess, keep everything from your financial aspect. Don't change jobs. Don't do any payroll deductions for large sums of money. Don't move money around. Don't do anything to upset the apple cart, if you will.
Right.
It's got to look the same as when the underwriter originally underwrote the file, which is kind of our goal. And we approach this because the expediency of it, we'll have a borrower that says, we're not going to, a seller in a borrower says, we're not going to close for 60 days. But then at day 40, hey, everything's changed. Now we want to close next week. Our job as a lender is we make sure that we have everything done up front. We have underwriting approval done. And the only thing we're waiting on at that piece or at that point is the appraisal. If I know that I've done my job appropriately and I have everybody ready, if you were to call me and say, hey, Brian, they want to close a day earlier, not a problem. We're done.
So, Brian, really appreciate you being here today. It's, we talk every day on the phone a couple of times anyway, but, I think providing this kind of information to our group is really important. And if you would, I'd like for you to just kind of tell us how we can get in touch with you. Tell us, kind of wrap it up for us and give us all those contact information that you've got.
Yeah. Well, you can always reach me. My cell phone number is the best way to reach a voicemail or text. That's 850-803-7661. You can reach me via email at bwparker@primelending.com. As far as a little bit about Prime Lending, we're owned by a national bank, Plains Capital Company, but we're a local lender, which I think is another piece that it gets lost in a lot of what's going on nowadays. Is we've become a society that looks for the cheapest possible rate we can get without concern of quality of service that you're going to get. And you have folks that will go online and they'll see a rate only to find out, a week later that it comes with a lot of extra fees that local lenders don't necessarily charge. There's also a certain aspect when dealing with somebody local, you have somebody to sit down with. You have somebody that at post-closing is going to see you at church, going to see you at the ball field. They're going to see it, at Little League or the grocery store, somebody that you can relate to, but also somebody that if you ever have an issue, be it a refinance or a change in escrow, or they just need some advice, you want to have somebody that you can call that's local, that you can speak with, not somebody that you might have spoken with for 5 minutes at the beginning of a transaction 2 years ago, and you have no contact with them anymore.
Fantastic.